Hello, everybody. Welcome to Thursday. The S&P 500 was down 0.8% today. So we had a 8-day winning streak snapped really by the Federal Reserve comments. And I mentioned this yesterday. Over the past several weeks, we've had a situation where the yields on bonds have been going up a lot. They had a meeting with the Federal Reserve, came out on November 1st, just 8 days ago, and said that, hey, we're not going to raise rates. And one of the reasons we're not raising rates is because the yields on bonds are already up a lot. That's effectively similar to raising rates. And so, of course, the yield on the 10-year Treasury went from around 5% and it dropped down to 4.5%. And what the Fed is looking at there is, they don't want to have easy monetary policy, essentially, where money is easy to get. And there are a lot of surveys out there right now showing that banks are, making it more difficult to get credit as far as that goes. And that's something the Federal Reserve would want in this scenario. But they'd also like to see these bond yields be up a little bit so they don't have to raise rates. And so when the rates come down, they're going to start talking much more aggressively. And they've been out there very much so doing that. And of course, Chairman Powell today said that, have no hesitation whatsoever to raise rates if needed, which seems like a pretty benign comment, to be honest. That's what you'd expect them to say. But they are talking again about, the fact that inflation looked okay, kind of in that 70s timeframe. And then, all of a sudden it didn't. It got away from that Federal Reserve and they really had to kind of break, everything in order to get it back down. They don't want that to happen again. And that's in the back of every Federal Reserve member's, mind at this point in time, I'm sure. But it was a little bit different. We had a pandemic. We had a lot of stimulus money that came out that's no longer coming out. They had a massive oil shock. We didn't have, that kind of situation here at this point in time. Matter of fact, oil's down below $80 a barrel, which is not a bad place to be for where we're at. So anyway, should have been taking a pause no matter what happened, no matter what news we want to attach, no matter who's talking. When you have 8 days in a row, that's the best in the last 2 years. 9 days is actually the best in the last 19 years. So it's not very common to have 9 days in a row of upward market. And we've had not just 9 days, but a pretty good run in terms of percentages. So coming back down here again, to me, this is totally a normal scenario. Market's just short-term stretched up to the upside. We'll see what happens here. Maybe we get a little bit more pullback before things go again, but still pretty good. I like what's happened so far. Even this pullback, I think, is probably a good thing. One of the things that does concern me sometimes is when things just run and run and run, kind of like they did in 2000. They get so far ahead of themselves that the pullback becomes really dramatic, and then people panic, and it becomes 45% stock market drop like in 2000. So I'd rather have these little pauses along the way, and that seems to be a much healthier motion for the market overall, in my opinion. So anyway, look forward to being able to talk to you tomorrow. Again, we do the show tomorrow. Got a lot of different things we'll talk about, and YouTube, just click in there and look for Talk Money with Tom, 12:15 to 1 o'clock. I do a summary of what I saw happening in the market for the week at the beginning of the show. So you can ask your questions live, see if we can answer them. So love to see you then, and we'll see you tomorrow. Thank you.